So today we're going to be doing a book summary / book review of Get Started Investing by the guys over at Equity Mates, Bryce and Alec. These guys run one of the biggest investing podcasts in Australia, and recently they've been going absolutely crazy by launching a whole range of podcasts. I think they have almost 10 podcasts at this point, talking all about investing in crypto, stocks, ETFs, business news, and so much more. Most popular books we see on investing are from an American perspective, so it's good to see some Australian books in this space as well, apart from The Barefoot Investor. So a very quick summary of the book itself, it basically just does what it says. It teaches you how to get started with investing, specifically in the stock market as it says on the cover, not in property or crypto. This book is largely about shares, ETFs, micro investing, LICs, and property is mentioned in the book here and there, but the main focus is specifically in the stock market. And I love the fact that they've made it specifically clear that this book is for long-term investors only. If you're a day trader, this book probably won't be much value to you. So this book itself has got 9 different sections or chapters, if you want to call it that, but I would roughly split it up into 3 distinct sections. Section number 1 talks more about getting you guys to invest and why it's so good, investing in the first place, getting your mindset right and getting your finances in order. Section number 2, I would say, is all about taking the plunge, getting into it, starting off with micro investing, ETFs, LICs, investing in stocks. And then the third section, which is the one that I personally found the most valuable, is stuff about investing lessons that they've learned personally by interviewing experts and other professionals in the industry and stuff like that. So the book basically follows a very chronological order, starting from an absolute beginner investor who knows nothing about the markets, who doesn't even know why the markets are important, to becoming an actual investor and beyond. Also worth mentioning that this is not a traditional personal finance book in a sense that it's not really going to teach you how to budget or how to pay off your debt or how to maximize your income or how to, get out of your debt spiral or anything like that. If you are in that position, there are a lot of resources online, but this book is specifically for investing in the stock market, in the shares, ETFs, micro investing, and all that sort of stuff. Now, when I first got this book, I was a bit surprised at how thick this book actually is. If you have a look at it, there's a lot of content in here, and I think the page count of this book is exactly 350 pages. Now, if you're someone who doesn't really read and you just look at that, you might feel pretty intimidated by the fact that there are so many pages in this book, but I can safely say that this book has been one of the easiest reads I've ever had. I've had it in a very long time. It's written in very plain English. They describe every single jargon and they really break it down. And I think it's great because the finance industry really loves to use a lot of complicated words, a lot of jargon to make things seem difficult than they actually are. So they can make money off you, and it's just how it is. So this book does a great job of really dumbing it down and make it really easy. For example, they've even defined the term interest rate, right? Now, for me and a lot of people that have been watching this channel for quite a while that are in the finance space, it's a very basic term and we already know what it is. But for someone who is an outsider to the finance space and they have no idea, this sort of stuff has tremendous value. And I think they've done a really good job of really dumbing it down and really making it easy for people to understand. And I think it gets a 10 out of 10 for readability. But if you were to ask me, in all honesty, if this book needed to be 350 pages long, I would say no. I don't think this book had to be this long. I think there are a lot of concepts in this book. There's a lot of repetition that has been applied across chapters. And I think that if that was to be cut down, this book could be within 300 pages. An example I'll give is the term diversification. They have emphasized this in so many chapters, I think across 4 or 5 chapters in the book. And I think this could have just been cut down a lot more. I understand how important it is to be diversified across Australia and the global market as well, across different sectors and asset classes. But it was just a bit too much for my liking, to be honest. And the thing is, they even acknowledged that they were talking about it too much. They said that they sound like a broken record talking about diversification inside the book, so that was pretty amusing. There's also lots of quotes from famous fund managers like Charlie Buffett, Warren Buffett, Charlie Munger, and so on. There's also advice from like-minded people, everyday people like us from the Equity Mates community about stuff they've learned, lessons they want to share, so that's pretty helpful. There's also lots of fun diagrams, illustrations, which add to the page count, but this is the style they were going for, and to be honest, I don't mind it too much. They were actually really pretty, some of the drawings. But the repetition part about diversification and lots of other concepts could be cut down for sure. Now, one thing I want to make clear, this book is for beginner investors, as it obviously says on the cover. So if you've been investing in the markets for quite a while now, chances are for the first half of the book, you won't find too much value. And personally for me, I've been in the markets for almost 5 years now. So for me, I didn't find too much value in the first half of the book. It was mostly information that I already know. But the second half of the book, where they talked about their lessons, how to research companies, how to actually research management, those parts were extremely helpful for my understanding. This is absolutely not to say that this book wasn't helpful. It is obviously very helpful for the beginner investor. It basically goes through everything from scratch and defines every single jargon that you've heard as a beginner investor. So it's really good for that aspect. I also think they've done a very good job in framing things in a much more exciting way. They said something like, each stock investment that you do, the company that you invest in, you're basically investing in a team of people, and these people are working round the clock to make you money, you the shareholder, you the owner of the company. These people are basically hiring the most smartest people on the planet to make the best products, to have the best services, and to make returns for you, the shareholder. And I thought that was pretty empowering to look at it in that way, because traditionally when people think about the stock market, they might find it pretty boring. Now, when I first started reading this book, I could sense that it had a clear bias against property investments. Now, when I say property investments, I'm talking about buying a physical property, like an actual house or land. I'm not talking about investing in REITs. So I'll read a quote from the book and I'll show you. Perhaps the biggest reason we prefer stocks over property is how you make money on the investment. With property, you are buying a piece of land with the expectation that it will get more valuable over time. Nothing about the land itself changes as you own it. You just expect to be able to sell it for more at a later date. Sure, you can renovate a house or subdivide the land, but at the end of the day, if you buy 1 hectare of land, you are selling 1 hectare of land and hoping to get a higher price for it. You're speculating about what someone else will be willing to pay in the future. The stock market is a completely different proposition. So basically, we can see some property slander in this section. Now, what this whole paragraph ignores is the fact that investment properties generate rental income. Oftentimes, if you buy well, the rent is able to cover the mortgage and expenses completely, and if you buy extremely well, it can cover your expenses plus grow over time in value. Property investment is not speculation, especially if you've done the research, if you've run the numbers, and you've got evidence to back up your claims as to what the property is going to be worth in the future, and if the suburb itself is going to grow and so on. Calling it a speculation isn't the best way to put it, because you can use the exact same argument for stocks and why stocks are a speculation. In my opinion, property and stocks are both very, very strong assets. They've been around for over 100 years. Property has been around for, I don't know, centuries or even millenniums. Both can make you a crap ton of money. It's just that with stocks, the barrier to entry is extremely low. Some people might even say that the barrier has been completely reduced to invest in stocks with micro investing coming in, but I don't think people should just rule out property completely just because they can't access it. There's other ways to get into it. They've got a few guest appearances in the book from people like Brandon from New Money, who probably has the biggest investing YouTube channel in Australia, Owen from rask.com.au, which is an investment education, research and podcast network, Tom Piotrowski, market analyst from CBA, who I'm sure you've seen or heard about, and lots of other people. So as I was reading this book, I made notes about different sections that I was going to either comment or critique on, stuff like management fees and how they aren't always bad. I like the fact that they mentioned this, because when we look at fees, people just want to pay as less as possible, but Dave actually highlighted the fact that paying fees may not be the worst thing ever, depending on what you're investing in, and why they might be happy to pay more fees in certain circumstances, which I completely agree with. They also briefly talked about buy now, pay later in the book. It would have been good to see some more information about the risks that are associated with the buy now, pay later service as compared to a credit card. But this video would have been a lot longer if I just sit here and nitpick and critique every little thing, so I'm just going to leave it there. Overall, it's a really good book that I would recommend for you to jump into if you're a complete beginner who doesn't know anything about the stock market. If you're someone who has been in the market for quite a while, I probably would not recommend this to you, seeing as you probably already know most of the things in this book. The last couple of sections about investing in stocks and researching companies, finding management, were the most valuable parts for me by far, and I'm sure you'll feel the same. This book does a really good job of introducing people to the stock market and giving actual practical tips, not just from themselves, but actual professional people in the industry, fund managers and so on as well. So give it a read and let me know what you think. I'll leave a link in the description for you to check it out. I'm going to be doing more book reviews in the future, so stay tuned. If you enjoyed this video, check out my beginner investing playlist right here, which goes through everything you need to know to start investing in the Australian stock market. Check it out, and guys, thank you for being here. I'll see you in the next one. Bye now. It's actually getting a phone call in the middle of recording.